A good rebound in the market we saw on Friday, as I said, posting a 1.4% gain. But of course, the market didn't quite have time to process the dismal employment numbers that we saw coming out from the States, showing that the economy, the largest economy in the world, failed to create any jobs for the first time last month, for the first time in almost a year. Given the fact that these numbers have now had time to be processed by the market, do you expect the investors to react negatively to these in Nigeria today?
I doubt that we'll get much of a negative reaction in Nigeria today. For the most part, I think part of the excitement that we saw on Friday was largely driven by domestic factors. As you well are aware of the announcements really by a number of those banks regarding key milestones really being achieved in terms of closure or resolution of some of the problems that have lingered in the banking sector for a while now. So as far as the weak data in terms of jobs from the US goes, I think that it's not going to have a significant further negative impact on this sort of activity from foreign investors. For the most part, over the last few weeks, we've seen foreign investors simply pull out of the Nigerian market because of some of these concerns that I've highlighted already regarding the resolution process, regarding the socio-political environment, regarding to how exactly the pace of reforms, how fast is it going to be going forward. So I suspect that the impact from such a negative reading, even coming out of the US, is going to be somewhat limited. I think right now markets are just focusing on what exactly is happening within the Nigerian space. A lot of the good news that we're expecting to happen appear to be coming out little by little. So I think going into this week, it's actually very likely that we see more of the sort of positive sentiment that we had at kickoff on Friday.
But surely, given the fact that it is one of the largest bourses on the continent, it is one of the most liquid, the banking sector, of course, is the most liquid sector and the largest sector. And we've seen the Nigerian market's performance closely correlated with what's happening on the global markets, and the risk aversion, as that started ticking up in global markets, did start taking its toll. So despite, as you say, the positive sentiment that we see in the banking sector, surely that will have some implications for the market if the trend that we've seen is anything to go by.
Yeah, I think you have a point in terms of the correlation. I think over the last few years, since the height of the initial crisis globally, I think we've seen increased interest really from foreign investors. And what happens is, in terms of risk aversion, we get that negative wave as well eating Nigerian markets. Earlier this year, I think the NSE came out to say that as much as 68% of trades on the Nigerian Stock Exchange were accounted for by foreign investors. So clearly there's a very large presence right now. Like you said, it's one of the largest and most liquid markets in Africa. And with that large presence of foreign investors, I think it's inevitable that you find some measure of correlation. But I think the point we're really driving at here is, over the last few months, you've seen a very, very dismal performance really come out of the Nigerian Stock Exchange. Currently, well, about 14% down, year to date. And a lot of that really we attribute not really to domestic institutional investors, but to a lot of foreign investors who have basically found cause to exit the market, even as this negative news globally has begun to build up. The weak jobs data is just one more in a series of concerns that have actually gripped global markets. So you had the Euro news, you had all sorts of things coming out of Europe, you had concerns about slowdown in US even way before now. And I think those has already sort of flagged investor optimism, foreign investor optimism really regarding the Nigerian market. What we are sensing is that in terms of the leeway to go, in terms of further selling by foreign investors, we think it's a little bit constrained right now.
As you say, the negative news, of course, is not new news in terms of the health of the global economy. So let's focus in on what's taking place in the banking sector. We have Access clarifying its merger agreements or merger plans with Intercontinental Bank, a raft of shareholder meetings scheduled before the end of the month, and that recapitalization deadline. What do you make of all the news flow that is coming out for the rescued banks and the acquirers that have come forward?
I think it's really the sort of news that we want to hear. The process has dragged on for so long. we're a little over 2 years in terms of this banking sector crisis domestically. And I think that that's already weighing on, any sort of optimism that investors, even domestically, will be trying to create. So I think what the spate of good news over the last few weeks, I think is very positive. In terms of the investors, I think it's a very key milestone that we've been watching for. It may not yet be the total panacea to hold the crisis that we've been having over the last few months, really. But I think it's something that it's a big hurdle that has been crossed. And the only thing that I think would surpass this in terms of significance is the final shareholder approval. We're just waiting on that. As you mentioned, a lot of those banks are expected to have those approvals before the end of this month, which is actually way ahead of the deadline that the CBN gave. I think that's what's going to cement the entire process.
Are shareholders from the rescued banks and the acquirers likely to give the green light for the deals that have been put forward? Are there any concerns that have been raised about shareholders stifling perhaps one of the deals going through?
I think concerns about what shareholders are going to do have always been existent. I think even where before now we've had this process sort of held up by a series of litigation by different shareholder associations and groups. But I think for the most part, CBN has been very consistent in terms of what it thinks has to be done within the sector. I think so far most of the rulings that have happened about some of these rescued banks are basically been in favor of the regulator. That said, it's not to say that some of the shareholders don't have a sort of valid platform in terms of disenfranchisement. But I think that clearly for those of us looking at it from the outside, the regulator clearly sees much more than any other of us can see. And I think that if that goes to the wire in case of in a court of law, I think it should be reasonable to expect that the regulator will be able to prove his ground as regards the expediency of having to take the actions that they've taken so far.